Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a look at Fibonacci retracement levels here today, just help you understand kind of the basic version of how to apply them, and also maybe more of an intermediate slash advanced version where you can understand where to set your profit targets effectively, based on Fibonacci retracement levels. I use this pretty much exclusively for my profit targets. Obviously, there's support and resistance levels you want to be aware of that are outside of Fibonacci specifically, all-time highs, things of that nature. But for the most part, you can get what you need out of a good Fibonacci retracement placement. Okay, so we'll go ahead and go with that. And to rewind a little bit too, in order to find Fibonacci retracement, there's a few different ways you can do it. The primary easiest way is to find it right here as the third most available option. It is in this category here. It'll be labeled as Fib retracement, short for Fibonacci. Now, if you are using just a separate exchanges, a lot of them have TradingView built in, and just so you don't have the application itself, then you can probably find a way around it or find Fibonacci retracement within that, right? I would say Fibonacci retracement is probably one of the most commonly used indicators that you can find. Okay, but if you're using TradingView, that's how you're going to find it. And I just went ahead and put a star next to it, or basically clicked on the star to essentially add it to my favorites, which is why you see it up here. That's how I can essentially use it quickly without always having to go through the drop down option. Okay, so that's kind of how Fibonacci retracement is found. Now, a little tip about Fibonacci retracement and the ways in which you can place them. Traditionally, you're going to want to be able to use it on, I would say, more dominantly use it on the one-day chart, right? So you can kind of identify the higher high or the highest high, right? And the most recent lowest low. So in this example, price is going down. So we're going to go from top to bottom and see kind of what that looks like. Now, the way in which you place it is you find the highest, most recent place, which is right around 69,000 for Bitcoin here. We're just going to click there and then come down. And you don't necessarily have to come right down to the exact corner. You can kind of stretch it out over to the side so you can kind of still see where it's going to go in the future. But you go ahead and go level or parallel with that line, right? So that's the most recent low. So that's essentially how you draw a Fibonacci retracement level from top to bottom in this example, okay? Now the inverse also applies too. So if things were moving the other direction, you'd just find the most recent low and then the most recent high. So let's just say, for example, this isn't over here yet, right? We're treading new territory right around 69,000 for Bitcoin. We want to see how much further it's going to go. We'd find the most recent low, right here, and go up to the most recent high. That's another way that you can do it. That is essentially just the two ways that you apply Fibonacci retracement lines. And it's just as straightforward as that, right? Now, granted, if you use smaller time frames, you can try to identify quicker movements. You can essentially go from the most recent high here down to the most recent low and see where it's going to play out, right? There's different ways you can do it, of course. It's not only exclusive to the one-day chart, but I find it to be the most beneficial or useful in that sense. And unless I'm trying to project or predict a very short time frame, then the one-day candlesticks are probably the best way to go. Okay, again, recent low, most recent high, or the inverse, most recent high, the most recent low if it's on the downswing. So that's essentially as straightforward, as simple as it gets, right? So let's go ahead and put this back up here, and you can kind of see what this would look like for the most recent data. And what we'll do is we're going to go ahead and go with the hypothetical on where this is going to go and where we want to set our profit targets if we're going to consider taking entry right now. Okay, so let's say, for example, we want to take entry right now at this exact time at 50,300. So we want to take entry and we're going to want to go to the upside, right? Our next profit target would, again, be based on previous support and resistance levels, but based on this exact scenario here, if we just use Fibonacci alone, we can see the major resistance levels, right? We've got a resistance here at about 52,300. So if you can see, what's kind of nice about this too, I'm not sure if you can see it on the screen, but it does show you the Fibonacci retracement levels. So that's 0.618, that's 0.5, etc. You kind of work your way down, but this tells you what the dollar amount is. So it's kind of nice. You can kind of take that and use that as a figure instead of trying to look across the side. Anyways, regardless of that fact, what I want you to take away here is the fact that when you're trying to set profit targets, first of all, if you're not setting 3 profit targets or more, in other words, you want multiple profit targets in place, you're doing it wrong. You're basically gambling. You never want to just throw your money out there, right? You never hope for the best and expect for the worst, right? Even though that's a good mindset to have, you don't want to hope in trading. You want to use real data and make sure that it's very, very much relevant. What I'm getting at is if you're not setting multiple profit targets, you're definitely not doing it right, and that's okay. Correct that behavior if you can. But more importantly, you always want to set a profit, 3 profit targets and at least a trailing stop loss. Now, most trading bots have that built in, so that's where our trading community comes into play. But generally speaking, what I'm getting at here is that you want to make sure to always set those up before you get into a trade. And that the reason why that's relevant is because Fibonacci allows you to find those profit targets quite easy, right? I mean, you can literally number these 1, 2, 3, 4, 5. So you want 5 profit targets, you can literally set your target right at those lines. But here's that little pro tip that I want to kind of share with you that's really worked out well for me over the last 15 years of trading. And what it is it boils down to something very simple, because you got to keep in mind Fibonacci retracement levels are things used by industry leaders. Okay, this is a very common characteristic. So it's one of those self-fulfilling prophecies, right? Most indicators have that aspect to them. They're accurate because people use them more so than the fact that they're actually relevant. Now, Fibonacci retracement numbers are very relevant. In fact, Fibonacci retracement, if you're not familiar with the equation, what it does is it just takes a progression of numbers and adds the previous. So 1 plus 2 equals 3. And what you do is you take 3 plus the previous number 2, makes it a 5. 5 plus 3 is 8. 8 plus 5 is 13. You keep counting up like that. That's the exponential equation, if you will. Look it up in your own time, of course, but that's essentially how these lines are drawn out based on that theory that is just relevant in nature. It's a super common characteristic that you'll see all the time. That being said, it's seen in trading too, okay? What I'm getting at here, this little pro tip that I was referring to, is to, instead of just setting your profit targets at Fibonacci retracement lines, set them just before, right? Don't be greedy, don't be just above. And the reason why I say that is because oftentimes you'll see prices bounce off of Fibonacci retracement levels very, very consistently. It's a really common characteristic. So when you see those lines getting hit, if you're going to consider taking profit, would you like to try to risk that line getting hit, somebody else getting filled, and then you don't, and the price comes back down? Probably not. I'd much rather err on the side of caution, not be greedy, set my target just below that Fibonacci retracement level, and let that do its work, right? Let that actually come to fruition. And what I mean by that here is just, for example, you'd set a profit target instead of at 52,300, go right around 52,000 even, right? Just below. If you're going to set a profit target here at 0.5 on Fibonacci, you're going to do 55,000 instead of 55,461. Okay. The better and more often you do this, the better the results, rather, right? So you do this consistently, I can assure you you're going to get filled a lot better, a lot quicker, more often, more consistent. Okay. So again, when I set my profit targets for my community, I'm typically placing Fibonacci retracement lines on the chart. I am following that up with a profit target that's just below a major retracement level, and also factoring in previous all-time highs as well, right? So keep this in mind. I'm not really mentioning anything regarding other indicators at this point. There's other factors that play into play. So for example, just say you have a 50-day simple moving average on the 4-hour chart that's just below a major resistance level, one of these Fibonacci retracement lines. You might want to go just below that instead, right? There's different things that you want to kind of factor in, but it is its simplest form. This is essentially what you need to be applying when you're utilizing Fibonacci retracement lines. Okay, so as simple as that. There's really not much else to it, honestly. It's just taking a consistent number, a consistent line, right, that happens frequently in nature and applies coincidentally to trading, and you're applying that and taking it just below, right? So you're taking profits before the next guy does. Heaven forbid it keeps going up. That's why you set 3 profit targets, right? You don't just go all in on one trade and then expect you to be in the money. Yes, it happens sometimes. You'll get blown out of the water half the other times, but I can assure you, you don't get lucky when it comes to setting multiple profit targets and a trailing stop loss. That's actually just a good skill set. It increases the amount of money that you're going to be making, your profits, and it helps minimize your loss, right? So again, to be a good trader, you got to have a good risk tolerance, and good risk tolerance comes from setting proper profit targets that are not greedy specifically as the next guy, right? Because these industry leaders, they control the market. They're getting out right at these Fibonacci retracement lines. Why not get out just before them? Okay, a good trader will get on board with what the whales are doing. Get in just as they start their momentum. Get out just as the momentum is lost. That's effectively what you're doing here. Hopefully I drove this home correctly and it makes perfect sense to you. If not, comment below. Feel free to reach out to me through social media, of course, and or consider joining my Patreon community. Thank you so much to my current members for just being amazing, awesome people, right? You are amazing. That's why I make videos like this for you specifically, just because you make my life tremendously better. And I can't thank you enough for making this a reality for everyone too. Ultimately, I mean, we're all benefiting. We're all working together towards the common goal, and that is to get those profits and to lock that in and to make sure that we are all self-sufficient traders. Thanks again for your time. We'll look forward to seeing you in the next video. Take care.